General Electric Company Singapore's stock slide is poised to get worse, according to JPMorgan Chase Co, extending a slump that already has wiped out $64 billion in market value this year. As the maker of power turbines and oil-filled equipment grapples with weakness in several key businesses, GE is likely to be capped around $24 a share, JPMorgan analyst Steve Chazot said in a note Thursday. He said he sees something in the high teens as an investable fair value. The shares ended Wednesday at $24.92 and haven't closed below $20 since July 2012. With a new boss, GE is likely to cut profit forecasts for 2017 and 2018 significantly. John Flannery, a GE veteran who replaced Jeffrey Melt last month as Chief Executive Officer, will meet with investors and conduct a thorough review of the company before presenting his vision for the future in November. To be clear, this is a reset to a lower number of which future growth is uncertain and realistically below average, wrote Chazot, who reaffirmed his underweight rating and price target of $22. The move lower is an adjustment to reality, not cyclical. GE has been by far the biggest loser in the Dow Jones Industrial Average this year as the manufacturing giant has struggled with uneven earnings and weak oil and power generation markets. The Boston-based company, which agreed earlier this year to deepen cost cuts amid pressure from activist and fund management, is closely tied to the volatile energy markets following portfolio changes shedding finance and consumer businesses. GE fell 2.7% to $24.24 at 12:26 p.m. in New York after tumbling as much as 2.8% for the biggest intraday drop in 7 weeks. The shares declined 21% this year through Wednesday, cutting the market value to about $216 billion from $280 billion. While GE's dividend is safe for now, the company will have to sell assets to continue funding the payout, Chazot said. Company executives have said paying a dividend is a priority. A GE representative declined to comment Thursday. Separately, GE said it sold the remaining 15.5% equity stake in Penske Truck Leasing Company, generating proceeds of about $674 million.